Well, good morning, everyone. Welcome to our Wednesday morning trading room. My name is Eric Senft. I'm going to be your host here for the next hour and a half. And I'm going to be demonstrating the DTS system to you. The DTS system stands for Diversified Trading System. And it's diversified because we're looking at the market from three different points of view. Just a real quick overview for those of you who are new in our room this morning. Here in the top left, we have the Hawk Micro Scalper. The top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And the bottom right is the Raptor. The Raptor is actually the latest addition to the DTS family. And it incorporates elements of the Hawk Scalper, the Falcon Swing Trader, and the Eagle Trend Trader all into one trading tool. The charts I'm focusing on here are the NASDAQ. I'm also following gold and crude oil, but I'd be happy to take a look at any market which is of interest to you. And of course, feel free to ask any questions. All right, so the markets just opened up, the North American Stock Index, and well, let's take a look here at the Raptor. Let's see what's been going on in the overnight, and you see the London session is kind of waffling back and forth, back and forth. So it looks like we opened somewhere around 82.80. And where did we leave off yesterday? The market took a little bit of a decline into the close yesterday, and they finished the day around 82.70. So a little bit of a gap below the market. Yesterday was a very active afternoon session, as we suspected. It actually was a pretty good morning session as well. Got a nice little cloud crossover signal here on the Raptor. So when the trading bands change direction, remember we anticipate the market to retrace back into that band and for that band to offer some sort of support, or in this case, resistance. We produced a signal, actually a couple of signals. You had a few chances to get in here. And then the market fell off in a rather steady fashion, which is nice. Juan would like to see crude oil. I'll bring crude oil over here for you in a second, Juan. Before I do, though, let me just give you a real quick overview on the signal itself. All the signals develop the same way. First, when the signal parameters are being met, we're going to get this warning dot as well as an audio alert. So that draws our attention to the market. When all the signal parameters are met, we're going to get a triangle and a hash mark. And that tells us it's time to make a decision. Now, not all signals are created the same. You're going to see that some of these signals print that we don't take because they don't meet our parameters. Essentially, what we're looking for is we're looking for confluence. So we're looking for the trend line to be the same color, the bars to be the same color, the signal to be the same color, and the filter to be the same color. And that will produce a buy or sell signal for us. But I'll get into that more as we go along. So let's take a look here at crude oil on the Eagle, and crude oil really quiet. The market left off down here at around 36.40 yesterday. Very, very quiet overnight. I have a feeling the crude inventory is going to be kind of influential this morning. Usually we see a little bit more activity in crude oil. Our trade forecaster, this is actually an add-on tool. You can pick up this trade forecaster and put it on any chart, not just a DTS chart. But according to the trade forecaster, we're supposed to be in trend mode here for another 156 minutes. So about 2.5 hours. We're going to be in trend mode. Now, it's currently a little bit bullish. I suspect that we're going to see the market Give us a little bit of a sideways range, however, before we get into that inventory report in about an hour's time. We did produce a trend change signal right here. With the eagle, we have this band which gives us our directional bias. No, it's not an Ichimoku cloud. I know it looks like one, but it's not. The band changed direction here, so now we have a bullish bias, and here's our first signal, which printed, where everything is all green, right? So we have green bars, green signal, green warning dot, and a green filter. Only problem with this signal is we haven't really had a retest of the lows yet. We normally like to see a retest of the lows before the market does a full-on reversal. But we'll come back to crude in the eagle there in a moment. Here's crude oil now on the Falcon. And it's also waffling a little bit. You can see our trend line starting to break up, go from green to red to green to red. That's not usually what we want to see, but again, it's not a big surprise given that inventory is coming out in about an hour's time. So this will actually give us a pretty good opportunity. It'll give us a pretty tight range that we can bracket going into the crude inventory report. And yeah, our filter breaking up here at the moment. Another add-on that we have are these support and resistance lines. This is the Ultimate Support and Resistance Suite. This is also an add-on. It will work on any chart, not just a DTS chart. And currently we're bouncing off of the primary resistance line. So we've got the primary resistance, the median line, and the primary support. These tend to be the most influential lines. And well, for determining bias, once the market is above here, we tend to be a little bit more bullish, and once it's below, we tend to be a little bit more bearish. If the market breaks the primary resistance here, we usually expect it to move two zones, in which case we could see crude oil retreat down to 36.15, and if it continues to the upside, well, we might even see crude oil make a run at 38.57. No, these are not pivot points, and no, they are not Fibonacci retracements. If they happen to coincide with one, it is purely by coincidence. So there was the crude oil market on the Falcon, and here's crude oil now on the Hawk. And again, we're looking at a market that's very neutral at the moment. We can tell because we're getting all these yellow bars. The yellow bars are a sign of neutrality on the Hawk scalper. So right now, nothing really promising in crude oil. In the overnight, we did get a macro pullback signal. This is one of our high probability signals with crude oil. It's when the market retreats back to the macro line, that's this thick one, and the micro line goes out of sync, but everything else stays in sync. So pretty easy to identify. Macro pullback signal, one of our high probability signals, and it looked like it had some pretty decent follow through, at least for a little while. Here's another macro pullback signal right here. So the market retreats, the micro line changes color, everything else stays green. We produce a signal, and there was a nice little scalping opportunity also. But at the moment, I'm afraid we're not going to be looking for anything really tradable in crude oil. No problem, Juan. Juan says, thanks. Sure, happy to do it. Okay, while we were doing that, it looks like the NQ tailed off a little bit here. We had another macro pullback signal here just prior to the open. And that would be on our Hawk scalper. Let me see, did we get a signal out of the open? We must have. Yeah, we got a nice trend line touch signal here just as the market opened on the Falcon swing trader. And you can see that produced a nice little run lower. Did we get a signal on the eagle? We did, but honestly, this would have been difficult to take. This signal printed right around the open. And again, no real test of the extreme. So when we're looking at it like this, the market still looks rather sideways, right? It's up, it's down, it's up, it's down, it's up, it's down. No real hint on the eagle as to the trend, even though we're printing a signal. It's easier to see in hindsight, but this is why we have three tools, right? It was pretty obvious on the Hawk Scalper and the Falcon Swing Trader. So even though the market did make a rather pronounced move lower, it wasn't exactly setting up for a trend. Currently, according to the trade forecaster, we're still in scalp mode, which would make sense, for about another 15 minutes, after which we're going to be moving into trend mode. So that will be interesting. And then here on the Raptor, we had, see, the Raptor gave us a nice cloud crossover signal. You could have taken it here. Oh, sorry, that was pre-open. Here was the open. Cloud crossover. So the market retreated or tried to retreat into the cloud. The cloud produced some resistance, which is what we would expect. We produced a signal and a nice little move lower, short-term move lower. While we're waiting for the next opportunity, I'll show you the Geiger Counter, another add-on. This is a very interesting tool. The Geiger Counter is essentially a tape reader. It tries to give you the pulse of the market, if you will. So we have the histogram, which kind of shows us the recent history of the buy, the bid and the ask. We have the current bid and ask. And then we have this dial around here. This dial is fun to watch because it shows you whether the market is leaning one way or the other. And what we're looking for when we're watching the dial is we're looking for the dial to pull over one way and hold. When we see that, then we see the market starting to chew through those orders. So they're kind of waffling. The sellers are pulling it a little bit here. Well, there we go. That's what we want to see. We want to see it pull over and hold for a good 3 or 4 or 5 seconds. That shows us that there's some serious selling going on. No, they're still kind of fairly evenly matched. The reason that's helpful sometimes is, you see here on the Raptor, we're producing a sell signal. We've got the warning dot has been absorbed by the triangle and the hash mark, but nevertheless, we have a sell signal. If I'm looking at the sell signal, see, I see that. I see the Geiger counter pull over hard and hold and hold and hold. That gives me a little bit more confidence in the sell signal. What I don't want to see is I don't want to see it pull over to the buy side and hold, because that would tell me that there's a lot more buying coming in. Some people say, well, Eric, how can you make sense of it? It gets a little confusing, waffling back and forth. Well, it does, but you see, I'm just looking for it for that indication. See, when it pulls over and holds, it hasn't done it just yet. But you see, we got a little bit of a move lower there. We're going to get a lot more activity as we get down to the lows. There we go. We're kind of holding. We're chewing through those sell orders. And then as we get down toward these lows, the buyers are going to come back and try to push it higher. But a very useful tool, also useful if you happen to be in a position. You know, let's say we shorted from here, from the open, and now we're riding out this little swing. I'd be watching this Geiger counter very closely to see how strong the buyers are. The other thing the Geiger counter will tell you is, you see when we see it pull over and hold, in this case to the short side, and it's not shorting, it's not going lower, that tells me that that a lot of the buy orders, or pardon me, the sell orders are being absorbed by the buyers. Now, what I've done here is we just generated what we refer to as a soft edge buy. And I better get my stop order in place here before I get too cute with this. Oh, come on. There we go. I want my stop down there. Now what I'm using here is the Trailblazer. The Trailblazer is a trade management tool. On the other birds, I happen to have the Trade Manager. The difference between the Trade Manager and the Trailblazer is this component right here, the risk component. With the Trade Manager, I will never risk more than I can afford to lose. So regardless of how I set up the trade, let's say I set up to short the signal here. This risk amount will always be 2% of my trading capital. It will never be more. So whether I place a tight stop, let's say I put my stop there, or I place my stop up here, you see the risk amount never really changes, with some rounding exceptions. This is a very, very important concept, and one that most people miss to their hurt. You should always control your risk. It's actually the only thing you have any control over. All right, so we're trying to do this soft edge buy signal, and it was preceded. The reason I'm getting a little bit more bullish on this is because this little itty bitty test of the extreme that we saw right here. We're actually seeing another one right now as the market is testing the lows, and currently it's holding the lows. Oh, we're coming back with the sell signal. I think I'm going to get stuck here on the wrong side of this trade. Oh, shoot, they just tagged me. All right, well, I got a little bit cute with the market on that attempt at a counter trend. With the Trailblazer and the Trade Manager, you have 16 different stop strategies to choose from. And all of them are fully customizable. So let's say you wanted to go with an ATR type strategy and you wanted to make it a little bit looser, you can adjust everything like that. And as I said, you have 16 different strategies to choose from. The main difference between the Trailblazer and the Trade Manager is the Trailblazer has been designed to be a one-click system. So let's say we're generating a sell signal and I want to take advantage of that sell signal. Rather than have to go to the Trade Manager where I hit my set prices, I click for my entry, I click for my stop loss. I can preset my targets, or I can even click for my target. So enter, stop loss, profit target. Then I have to hit the submit button. So there's a couple more steps. With the Trailblazer, it's really just a one-click system. So if I get a sell signal that I want to take advantage of, I hit the sell market button and automatically I have my, I need to enable my stops, and then I'll automatically have my stop loss order, my profit targets, my break-even trigger if I choose to set one, and that's all done for me automatically. All right. So those are the primary differences between the different tools. We'll just cancel that because that was just a little demonstration for you. All right, let's see if we can find a decent opportunity as the market is hopping around here this morning a little bit. Kind of moving sideways. Where was yesterday's low? I think yesterday's low was around 42.60, 42.55. Let me check here. 42.55 was yesterday's low. Well, technically 56.5, but close enough. All right, while we're waiting, let's take a look here at the gold market. Here's gold. And gold opens at 5:20 my time, Pacific. Nice cloud trend change here. This is on the Eagle Trend Trader. Now this one would not have been easy to take out of the open either. So there was our signal out of the open. Ideally, we want to see this retest, right? We want to see that retest of the high end, then the signal print. We didn't get that, so I would not have taken the signal right out of the open, but a few minutes later, we get this nice green bar sell. Now the green bar sell, very high probability signal with the Eagle. And what you could do is you could set up to take that signal, that green bar sell on the hash mark, cover it above the highs, and there you go. About 20 minutes, half an hour after the market open, you hit your high probability target for a very nice little profit. And it looks like you had a couple opportunities to get in on this trade. You had a green bar sell here off of the hard edge and another green bar sell. Whenever the market encounters the hard edge on the Eagle, we're always anticipating some sort of reaction. Tom's asking, does the Trailblazer, is it separate software or does it come with Trade Analyzer? No, it's separate. It's separate software. The Trade Manager and the Trailblazer are two very sophisticated pieces of software. When Adam first told me about his intention to make a program that would manage your trades and your stops for you, I didn't think it was possible because of the programming required, because of all the variables involved. But the fellow who does the programming, for those of you who have been in the room before, you've heard me mention this before, but he actually programs the guidance systems for the cruise missiles for the U.S. military. So you know this programming is tight. And as I said, the risk component here alone is just a huge, huge variable. So let's take a look here. Well, let's say we looked at this first micro-macro cross signal right here. This is a high probability signal for us. What most people do in an effort to, not overexpose themselves is they try to keep their risk small by keeping their stops tight. The problem with that is, of course, how many times does the market bring you in, bounces around a little bit, takes you out for a loss, and then goes on to your profit target without you. Probably more than you would care to admit. What you need to do, though, is you need to place a proper stop to let the trade work out. Here, actually, let's use this signal right here because this is pretty good. So we get this signal here. What most people will do is they'll place their trade like this. The market will bring them in and immediately stop them out. But they're afraid to run a deeper stop, say up to this swing point, because they say, oh, that's going to leave too much money at risk. But watch what happens. So I put my stop here. I have $330 at risk. Now don't freak out. This is based on my trading capital. That's 2% of my capital. Maybe more for you and maybe less. And this number is adjustable. I worked with a fellow, he had a $300,000 trading account. We were only risking 0.25% of his capital because he had so much capital. If you're risking if you're trading a smaller account, say like a $10,000 account or less, you're going to end up risking more. But ideally, you want to risk less than 5%, 5% or less. So $330 if I have my stops really tight. What if I put my stops here at the macro line? Oh, look, it's still about $300. What about if I put my stops a little bit deeper? What if I put them above this little itty bitty swing high? Oh, it's still about $300. How can that be, you say? Well, did you notice what changes? What changes is the quantity that I trade. My risk remains constant, but I change my quantity relative to where I have my stop. but I never risk more than $300. This is what I can comfortably afford to lose. So if I choose to, swing for the fences and try to trade 6 contracts here, the market comes in, it takes me out. Okay, I've lost $300. It's unpleasant, but it's an amount I can afford to lose. However, for me personally, I tend to run a more reasonable stop, maybe something like this. This gives me a chance to ride out a swing and hopefully even get to my profit target before I get stopped out. Right? A stop loss is only a stop, or is only a loss if it gets hit. If it doesn't get hit, it's not a stop, or it's not an expense. That's what I was trying to say. So do yourself a favor, don't strangle your trades. Don't put everything in there so tight that you get stopped out on the slightest little hiccup in the market. All right, so things are slowing down here a little bit. I think we're looking at a possible trend change. We're getting another soft edge buy here on the Raptor, and we're working on a possible trend change here in the Falcon. You see how our trend line is starting to flip over, and we're starting to introduce yellow bars into the Hawk. So things are changing up a little bit here. There's obviously a lot of resistance just above the market. Okay, here on the Hawk, we're getting an interesting little opportunity. This is a green bar sell signal, or it's working on a green bar sell. Shoot, it just went back into yellow bars. This is a green bar sell signal right here. They tend to develop near the end of a trend. It's kind of the last ditch effort on the part of the, in this case, the sellers. Nice thing about the green bar sell is you can trade it either way. You can either trade it with trend, or you can set it up to take it counter trend. You can look to buy it on the failure. It is our counter trend signal. But right now we're back into yellow bars, so that kind of nixes that idea. But this 42.56 area, this is where yesterday's lows were at. So I'm wondering whether we're going to see a little bit of a hiccup here. All right, you know what? We're in a demo room. Why don't I demo? So here with the Trailblazer, because we don't have that risk manager component, when I place my charts or place my order, I can either punch into the market or I can right click and place an order. You just need to be aware those orders are live the moment you put them on your chart. So we're looking to buy here. I think I'll look to buy 42. We'll give it a little bit of room. We'll buy here at 66, just above this little high. And I'm going to get my stops enabled. We'll do a swing strategy and we'll go a couple of ticks off of the low. There we go. So now if the market brings us into this, you're going to see the trade manager is automatically going to give me my profit targets. I've preset a 20 tick target, and I have another one with a 0 target, so we're trading 2 contracts. Going to take profit on one on target, and the other one I'm going to leave in as a runner. Now we also automatically got our stop, which I'm going to hold there at the moment. I'm going to disable the auto rolling feature. Because they may try here to once again run the lows. All right, here we go. Come on, get up there. Get going. Do we have our trend change signal on the Falcon yet? No, not yet. So right now the Raptor giving us a bit of an opportunity here, just about to hit the break-even trigger. Now when we hit the break-even trigger, you're going to see the Trailblazer take my stop from down here, automatically take it to the break-even point. Now sometimes I'll disable the break-even if I'm looking for a little bit more of a run here. But we've got the hard edge here at 42.72-ish. That's probably going to be a pretty reasonable profit objective, I think. As we may end up in a bit of a sideways range today. At least that's how it's shaping up at the moment. Come on, get up there. Yeah, we'll give it a little nudge with the mouse. Actually, you know what I'm going to do, folks? I'm going to disable this because what I'd like to show you is I'd like to show you how the Trade Manager and Trailblazer automatically roll the stops for us. Just going to try to hold out for this swing, and then I'm going to go to a different stop strategy. And hopefully you'll be able to see how this tool automatically manages the trades for you. And what that does is it enables you to look for other opportunities. You know, once you're in a trade and you have your trade manager set up to manage the trade for you automatically, well, that frees you up to look at crude oil or gold or the E-mini or the pound US dollar pair or whatever. Tony's asking, Eric, when you have time, what are your Raptor cloud color settings? Here, let me show you on the other Raptor chart. This is the mini Dow on the Raptor. And you can see the mini Dow not quite as active as the NASDAQ this morning, just kind of blah, just kind of sideways. And before I show Tony the settings here, one thing to note, when the market is moving sideways like this, the best strategy is to let the market get out of this sideways range, look for it to retest, which it will, and then look for your buy signal. And likewise to the short side. Let it get outside of this range, retest, and look for your sell signal. This is the best way to handle a sideways market. Now, I'm showing you some things here this morning because, hey, it's a demo room, and I'm sure you wouldn't appreciate just hanging out for an hour without seeing something. But if you're trying to follow this and you're looking for a good opportunity, let the market get outside of this range. Okay, so Tony says, what are your cloud settings? Here are my cloud settings. Come on. So the first cloud I have at 8 ticks, and those are the default colors. The second cloud is at 12 ticks, and you can choose whatever color you like. I happen to have cornflower blue on my band and royal blue on the band edge. All right, so if you want to make it pretty, but again, you can make it whatever colors you want. Okay, so we've encountered the band. We've hit our first profit target. Oh, actually, even with the swing strategy, you see that the market has automatically rolled, or the trade manager has automatically rolled my stops. Interesting question here from Michael. Michael asks, you don't use any volume indicators? Well, Yes and no. Volume and momentum is already programmed into these tools. There's a lot more going on with these tools than what you see just on the surface. The tools have been stripped down to be visually appealing but simple. We're trying not to clutter what you're seeing here so that you can make a decision. Making a decision is so important in trading. Let me bear with me here a moment. I'm going to show you a chart. This was a real chart. Where did I put it? This was a real chart from a trader. And when I was working with this fellow, I asked him, okay, show me a buy signal. Well, he couldn't. He said, well, okay. He did everything in hindsight. He said, well, okay, back here, this was in sync with that, and this was doing this, and that was doing that. But, he had so many caveats that he couldn't make a decision. This was just paralyzing him. He had everything on there. He couldn't make a decision. That's part of the reason for the DTS system being so stripped down, is that we have just enough on here to make a decision, but there's so much more going on in the background. There's momentum parameters, there's volume parameters, there's even price parameters. Price action has to do certain things in order for these signals to print. Now, they're different for the different tools. The settings or the tools used to determine when a market is swinging is different than the tools used to determine when the market is only in a scalp mode. All right. Now, having said that, we do also have the dynamic equivolume bars. You're going to see how some of these bars are fatter than others. This is the dynamic equivolume bars. These are also an add-on from Indicator Warehouse. They will work on any chart style. This is what makes them different from traditional equivolume charting, which usually only works on candlesticks. These will work on, well, I'm using the mean Renko bars, which come standard with the DTS system. If you want to use regular Renko bars or some other type of Renko derivative or range bars, they will work on that too. They'll work on tick bars. They don't work on volume bars for obvious reason. Volume bars are already printing at set volumes. But with these dynamic equivolume bars, you get a really good feel for where the market is getting more active, at which prices. So you can see there was a lot of price activity down here around 42.56. How can I tell? Well, the bars started to get much wider. There was a lot of activity. See, we had a pretty good idea that this breakout, when it came right here at around the 42.76 mark, we had a pretty good idea that breakout would be sustained. Do you see why? Do you see the difference? 42.76 or 75.76 is obviously an area of support. The market has turned twice at that level. But can you see why we can tell that once the breakout comes, it's going to be sustained? Because look at how light the volume was the last two times, and look at how heavy the volume is when it's coming in again. And each time there's a lot of buying going on here, but there's even more selling because we're getting these wicks at the top of our bars. So once it breaks 42.76, all of a sudden the sellers are sent, or pardon me, the buyers are sent scurrying, and we get this quick little move to the downside. Now, what a lot of people don't realize is that when the market is trending, the volume is actually pretty light, right? See, the bars are relatively thin when the market is trending. It isn't until we hit areas of support or resistance that all of a sudden the buyers get really excited, or the sellers, right? You get that area of conflict. So you can get a pretty good idea of where the support and resistance areas are likely to hold. So the programming itself takes into account volume and momentum, but if you would like a visual as well, the dynamic equivolume bars are great. In fact, one of our room members makes a habit of identifying the widest bars, and he'll plot, support and resistance lines off of them in anticipation of some sort of reaction, right? Because now he knows where the buyers and sellers are hiding out. So you can do that with them too. Juan asks, a good question though, Michael, really good question. Juan asks, can you explain the meaning of the dot, the arrows, etc.? Sure. Let me show you here on the hawk. It's perhaps a little better. So with the signals always print the same way, regardless of the tool. When signal parameters are first being met, we get a warning dot and an audio alert. So, I'm sitting back in my office reading my book or sipping my coffee, and all of a sudden I hear scalp. Okay, so I go to my hawk and I've got a warning dot. Okay, so I know some of the signal parameters are being met. When all the signal parameters are met, I'm going to get a triangle and a hash mark. Now that tells me it's time to make a decision. Actually, this is not a bad example either. This is technically a first micro-macro cross signal. It's a high probability signal for the hawk. With this particular signal though, again, I don't have the retest of the low, right? Usually we want to see the retest. If a market is bottoming out, we want to see it retest the low, stop it, and then come back with a signal. This is typically where we get our first micro-macro cross signal. This signal, however, is printing, on this part of the leg. So I might be thinking, oh, well, the market still owes me a retest of the lows. So what does that mean? Does that mean I don't take the signal? No, not at all. It just means that if I'm going to take the signal on the hash mark, and you have to remember the hash mark is only a suggested entry. But if I choose to take the signal on the hash mark, I'm probably going to try to cover my trade a little bit deeper. Why? Well, because I might be getting this retest. So the market brings me in. The arrow tells me the hash mark has been engaged. The hash mark will always print one tick above or below the signal bar, whatever the case may be. So one tick above if you're buying, one tick below if you're selling. The arrow tells us the hash mark signal has been engaged. And now, our trade takes a little bit of heat. We come back with a macro pullback signal. At this point, I can start to roll my stop up because obviously we've got a swing, and I might even become a little bit more aggressive with my stop. And then we go on and we hit our high probability profit target. So that's what the triangle and hash marks are, and the warning dots. And those will occur on all the platforms. So you'll see it here on the Falcon Swing Trader. We get our warning dot got absorbed on this signal, but the triangle hash mark, again, that tells you it's decision time. It's time to figure out what you want to do with this thing. And likewise here on the Eagle. Now actually on the Eagle, we're working a rule of three signal. The rule of three is actually our counter trend signal, where we end up printing three signals against the hard edge. Remember, our band gives us our directional bias. The $64,000 question is, was this our retest of the low? Right now we've only printed 2 signals counter trend, but a rule of 3 must always be preceded by that test of the extreme. Without that retest of the low, the rule of 3 is not a viable signal. All right, so let's go back now to our Raptor trade. And you can see, again, the Trailblazer did a great job of rolling our stops for us. But now we're getting a little bit more open profit. So maybe I'll go to the ATR strategy. It's a little bit more aggressive. And if the market continues higher here, you're going to see it's automatically going to start to take my stops and roll them tick for tick. Now, you shouldn't be shy. See, we got about $250 open profit. You shouldn't be shy about hopping out with that. But let's see if we just can't run this out a little bit further. Working on a cloud crossover now on the Raptor. Remember, that's what we saw here earlier, where the clouds crossed over. We anticipate that the market's going to retreat into the cloud, and that cloud is now going to offer us some support. So here we are, the market's going to come into the cloud. We're going to expect the cloud to offer some support to the market, and we should be generating a buy signal out of that. That will also be one of our higher probability signals. Come on, get up there. Give you a little push with the mouse. All right, how are we doing time-wise? 17 after 7. That means crude inventory is going to be coming out soon. Now, I'm just going to let the, I think we're going to back up here and get tapped. Unless the buyers show up all of a sudden. You can see there was some active buying down here near our break even. Gold seems to be rallying a little bit, and that's going to put a little pressure on the stock indices, I think. What I wanted to do is, in the meantime, we'll bring over crude oil. And I'm using the Falcon. I can use any of the tools, but we're going to use this OCO function, and we have an insanely tight range today. Insanely tight range for crude inventory. This is dangerous, folks. When the market is this tight, if you've ever traded crude oil, you know that it can go up and down in a heartbeat. But we're going to do it anyways. So with the OCO function, OCO stands for one cancels other, and it allows me to do bracket style trades. So I'm going to throw a buy order in above the resistance line. I'm going to use the primary support here for our short position. Now these orders are live the moment you put them on the chart, so you have to be careful with them. They're not like the orders that we place with the trade manager where we can set up an order, we can park it, and then we can submit it, and then it's live. No, these are live the moment you put them on your chart. So let's do an OCO order again. We're going to buy above there. We're going to sell below here. Stop it. And what I'm looking for, obviously, is I'm looking for a clean breakout. And I will run a pretty liberal stop. Actually, why don't I show you the chandelier stop? That's a pretty liberal stop strategy. And I will enable that. And we're going to keep an eye on this as we get into the inventory report, because I have a feeling it's going to have a bit of blowback today. So let's throw the Geiger counter on here also, so that we can watch the time and sales unfold. And we still have about 10 minutes before the inventory report is released, so we may come back to this one. Let me just take that out of the way for the moment. Oh, it looks like our stops did get hit here on this little bit of a reversal. So you can see the trade manager, or the trailblazer in this case, sorry, took us out at the preset stop strategy. And now we're kind of waffling again. All right, here we do have a rule of 3 now on the Eagle. So we've got printed our 3 signals, counter trend. The thing that bothers me though is the retest of the low, right? We haven't seen a real good retest of the low. Which is starting to make me wonder whether this current pullback is really more of a bear flag. We're still in the hard edge. We'll see if we come out of that hard edge with a sell signal or a buy signal. If the trend is changing, we should have an opportunity at a decent signal. And look at this. I don't think I've ever seen trade forecasters say that the market's going to be trending for 331 minutes. That's huge. So whatever they settle on here, chances are it's going to be a rather prolonged move. Tony says, Eric, my support and resistance lines are different than yours. Okay, I think we went over this the other day. The best thing to do, Tony, is to shoot an email to Ben. And make sure that your data is set on, mine is set on default 24/5. I think we found out that that made a little bit of a difference. Your session template in your data series. All right, let's go back now to crude oil. Well, we'll bring it in here. I don't see anything going on with the NASDAQ just yet. Although they are trying to press a little bit higher, aren't they? Shoot, we're getting a first micro macro cross signal. All these yellow bars, yikes. Not giving me a warm fuzzy feeling with all those yellow bars. I like to see this, right? Market in an uptrend, macro pullback comes back. You get the failure, you get the first micro macro cross. There's your high probability signal. Goes down for a scalp, comes back, macro pullback signal / 4 arrow consolidation, also high probability signal. Boom, down she goes. You know, if you were trailing a stop, fantastic. Though this is the way I like to see it set up compared to this. There's just a lot of waffling going on here at the moment. They're not really committed. All right, a few minutes yet before crude inventory, so why don't we concentrate on that? The market right in the middle of our little trading bracket range, so that's kind of interesting. I might give them a couple more ticks here on the sell side, just because, hey, this is crude oil, and crude oil is a crazy market. I'll do the same thing here on the buy side. And when the market starts to overlap like this, it really is a tough call. It really is a tough call to try to figure out which way the market's going to go. Right now, we're producing a buy signal on the Falcon. And it surprises me how often the DTS system will actually predict the direction the market will take before the market takes it. So we'll see. We haven't engaged the buy signal yet. We do have the buy signal right there at 37.38. That would be the entry price. But here on the Falcon, our trend change signal. So when the trend line changes color, in this case it goes from red to green, we get this push here that changes the trend line color. Then we get the sellers trying to fight it back. And now we get the buyers coming back and confirming the signal. It also happened to be a late filter entry signal, which is another high probability signal. The late filter entry signal occurs when the filter goes out of sync and comes back into sync, but the trend line never changes color. Very important. So a few factors here suggesting maybe crude oil is going to make a little move higher. Maybe, kind of, sort of. Okay, a couple minutes still. Good. I'm glad, Tony, you figured out the support and resistance lines. Okay, as we get closer to the inventory, you're going to see this Geiger counter go a little bit crazy as traders start to position themselves. Right now, the order sizes are relatively small. See how they're getting a little bit bigger? They're starting to position themselves. See how the order flow is starting to change, how it's becoming faster. And we're going to see this dial start to swing back and forth violently here in a moment too. There we go. And then we're going to see, boom, the market probably move one way or the other. Okay, Tom, I'll get to your trade manager question there in just a moment. We're just going to watch the inventory release here. Right now, the seller's really loading up. Look at the sell side here. The buyer's currently not able to absorb all that. Oh, here they come. Look at that, pulling over and holding to the buy side. Our needle red, though, the short-term bias, looking a little bit bearish. I'm wondering whether the bulls are just letting the buyer or the sellers load up and then they're going to whip them out of their trade. We'll see here in a second. All right, the inventory report should be hitting the floor almost any moment. There they go. Ooh, well, that was fast. Ran up, hit our profit objective. That was a quick $290. The other thing you can do with the inventory report is you can let it release like this, and you can bracket the range after the release. This is how a friend of mine likes to trade it. So once the market seems to settle down, if you wanted to do this again, is you could say place your sell order below the low, and you could place your buy order above the high. Yep, that's above the high. And now you kind of have your after report range that you can bracket. And you can usually do this with in about a minute or so. Michael asks, is this recorded? Yes, sir, it is. And you can watch the video either later today or tomorrow at the Indicator Warehouse YouTube channel. They happen to have a channel on YouTube. Okay, so you can see our trade got engaged. The market's a little less violent now. It didn't hit our profit target and stop us out right away, but now we've got our stop enabled according to our chandelier strategy, which is the one that I have set up. We have our break-even trigger in play. The only thing you don't have in this case is a preset profit target when you're using your OCO orders. All right, we're going to put that one on the shelf there for a moment, let that percolate a little bit. Now, Tom was asking on Trade Manager, when I submit a market order, stop and targets don't work. Why is that? All right, so here's your Trade Manager. So what you're doing is, let's say you are, well, let's say you're going to buy the market. So you buy the market, you don't have your stop loss, and you don't have your profit target. What's wrong with that, he says? Well, you probably don't have your stops enabled. Right, so let's enable our stops. And now when we hit buy, we get our stops enabled. And we happen to have our break-even trigger. Your profit target will not print with your buy or sell market buttons, but your stop will, so long as you have your stop enabled. By the way, folks, this wasn't a signal. I'm just punching in to demonstrate. All right, so chances are you did not have your trail indicator enabled. If you want your stops or your profit target to print, you do need to use the Trade Manager and set your profit targets, or to set your profit targets. Well, actually, I think, wait a minute. Yeah, no, if you're using the market buttons, you don't get a profit target. You have to use the set prices button in order to get a your profit target to preset. And then you hit your submit and you wait for your order to get filled. But yes, almost guaranteed your trail indicator was not turned on. All right. Juan says crude inventory is up. Yeah, a little bit of a hop to the upside. We're still nursing that trade a little bit. The NASDAQ coming back now with a hard edge bounce on the Raptor. Nice little hard edge bounce signal right there. That's a buy signal. Here's a trend change signal on the Eagle. So we can look to set it up. Let's see, how deep can I risk it? No. See, Trade Manager won't allow me to risk more than I can afford. So given my account size, if I try to risk it way down here, it says, nope, sorry, Eric, can't do it. Not at 2%. If you want to dial it up, say, to 4% of your capital, then we can do it. But if you're only going to risk 2%, nope, it's not going to work. So, a safety feature built into that to prevent you from, well, risking more money than you can afford to lose. That is what most traders do wrong. Most traders risk far too much capital. And they also do the opposite. They don't risk enough when they have a winning trade. Here's another scenario I bet will ring true for some of you. You take a signal, and let's say you convince yourself, hey, I'm going to be a real conservative trader. I'm only going to trade 3 contracts. So you take your first trade, you go in and you trade your 3 contracts, and you lose. You lose your money. So next trade, you go in, you trade 3 contracts, you lose again. Third trade, you say, okay, the market's got my number today. I'm not going to risk 3 contracts. I'm only going to risk a single contract. Well, isn't it that single contract that turns out to be the winner? So you're still stuck with a big loss because you've lost more, right? You've lost twice on 3 contracts, and you've only won once on a single contract. With a tool like the Trade Manager, you're always capitalizing yourself correctly. So let's say we took this red bar buy signal, which is a high probability signal for us. It's one of the signals we look for. And let's say we set up the trade like this. Okay, I'm risking $300 if the trade goes poorly. But look, I'm correctly capitalized so that if the trade works out, I also maximize my earnings. Right? Very important. You not only want to control your losses, you want to always maximize your earnings. So that when the trade, does go up, okay, boom, scalp, I made $200. You only need to do that a few times a day to do very well for yourself. In fact, that's another thing that we point out in the trading room all the time. You see a lot of signals printing here, right? This is the Hawk Scalper. It's a scalping tool. It prints a lot of signals. That is not how you make a lot of money trading. You make money trading by focusing on a few signals during the day, a few high probability signals, and capitalizing on those. So for instance, if we had, if we had our first micro macro cross signal, let's say we're only going to focus on the first micro macro cross signal. So we had one here. Yes, we took a little bit of heat, but it worked out. We had another one right here. That one, took off pretty much without much hesitation. We had another one right here. These are just your first micro macro cross signals. These are signals that tend to have a very high probability of success. We had another one right here. Are we at the open yet? Oh, well, here, we'll cheat this one in. This is a few minutes before the open. So in this trading day alone, we have 1, 2. Oh, we had one here. Okay, technically that one engaged, so we'll take that one. 3, 4, 5, 6 signals. So providing you allowed at least a reasonable stop for each, and you ran a $50 profit objective for each, that's 6 signals, $50, that's $300. That's not bad. You could have easily taken even just 3 of those. That's $150. Well, you say, well, Eric, I can't make a living on $150. No, you can't. But what if you traded 2 contracts? Well, all of a sudden, that's $300, right? What if you traded 4 contracts? That's $600. Okay, we're starting to get into some pretty serious money now, right? So that's how you make money trading. It's not chasing every single signal around, but it's focusing on the high probability signals and then correctly capitalizing yourself on those signals so that you never risk more than you can afford to lose and you maximize your earning, or as much earning as your capital allows. I cannot overemphasize this, folks. So many people miss the boat on this. And they wonder why they can't make money trading. It's not trading more. You actually make more money trading less. Yes, you heard me right. You will make more money trading less than trading more. Tony gives me an amen. It's true though. Once you understand that, it will make a world of difference to your trading. Juan is asking, what are the high probability signals? Okay, bear with me here just a moment. We have what we call the cheat sheet. So if you're trading the hawk, for instance, these are the high probability signals that we focus on with the hawk. You see there's only 5 of them. The first micro-macro cross, perhaps the highest probability signal. The macro pullback signal. The 4-arrow consolidation signal. The post 4-arrow consolidation signal, which also coincidentally happened to be a macro pullback. And the red bar buy or the green bar sell, which would occur in a downtrend. These are our highest probability signals with the hawk. Those are the ones that we focus on. With the falcon, we have our basic trend change signal. We have our late filter entry signal. And then we have our trend line touch signal. These are the signals that we're going to focus on. Right? So if you're trading the falcon and the trend line has changed from green to red, right away we're on the alert for a trend change signal. When everything comes into sync and we get that trend change signal, we know there's a pretty good chance that market is going to reach our high probability profit target. And we have same things for the eagle and the raptor as well. There's high probability signals for each of our tools. All right. So the NASDAQ put in a nice little rally there while I was up on my soapbox. Had a nice little first micro-macro cross signal there, which also went higher. Working another macro pullback. You know, we don't like to see too many macro pullbacks within a trend. That does start to tire the market a little bit. We'll see if this develops into a 4-arrow consolidation. It may have one more push higher to retest these highs before they fold up and start heading the other direction. I think there is a very real possibility we could see a little bit of a move lower here. Oh, see, now we're into yellow bars. So 1, 2, 3. This was actually our 4-arrow consolidation right here. Kind of tripped rather quickly on me. Here, we'll take it a little late. We'll do this one just for demo purposes. And what I would be looking for at this stage is a retest of the high. I'm not convinced the buyers have got much left in them. We're just looking for a retest of the highs and perhaps the market folding over on us. Yeah, now they're starting to retreat. Okay, we're gonna kill that signal, and we're gonna go back now to our crude oil trade, which is working nicely. So we're at break even right now, and we've got about $300 in open profit in addition to the other $300 that we took out earlier. So a nice little day here on crude oil. You know, no reason to be greedy. There's nothing wrong with popping out and putting that money in the bank, especially since it looks like we might be getting a little bit of a double top type thing going on here. And the Geiger counter really starting to pull over hard there to the sell side and holding. So it looks like crude oil struggling a little bit. I'm just as happy to take that profit. All right. Oh, we got a quick little trend change signal on the Falcon. We should get another trend change signal, and it looks like we're getting a soft edge sell here on the Raptor. So things looking a little bit more bearish here. I'm going to, oh, darn it. Come on, Falcon, get up there just a little bit. Give me that trend change signal. You see here the hawk has drifted into red bars now. This is not the first micro-macro cross because our macro line is still out of sync. However, the market is getting a lot more bearish. No, they're not going to let me back in here. Well, here, I'm going to punch in an order here on the Raptor. We're going to throw a stop in above the highs. And we'll see whether the Falcon will give us a trend change signal. Come on. They're likely to drift down here back to the median line around 42.73, 42.74, somewhere in there. This is on our support and resistance suite. No, they're not going to give me a chance on that one right now. So we'll nurse this Raptor trade a little bit. Juan is asking, which bird is best for scalping crude oil? Well, that would be the Hawk microscalper. That's the one that was designed. Here, I'll bring crude oil over. That's the one that's designed to pick up scalping signals. So here we had a first micro-macro cross signal on crude oil. Here we have a macro pullback signal on crude oil. These are both high probability signals for us. A lot of choppiness, a lot of yellow bars. We avoid the market when that's going on. Here was another macro pullback / first micro-macro cross signal. Here was a first micro-macro cross. It gave you a little bit of heat before getting up to hit its profit objective. Here's a macro pullback signal. I don't know if that one hit its profit target. Oh, it did too. Whew, that was close. I was going to tell you that, okay, I'm going to show you something no other trading room moderator shows you, and that's a losing signal, but it did work out. Just hit the high probability target and then reversed. First micro-macro cross signal. Another first micro-macro cross. This would have been a nail biter because of all this yellow bar activity. It did work out. I'm not so sure I would have taken it given that the market was in that sideways range. Here's another first micro-macro cross signal that worked out. So you can see a very effective tool. Here's a macro pullback signal. Here's a first micro-macro cross signal. When I get a first micro-macro cross, and people in the trading room hear me say this all the time, that I'll take that signal almost without exception. And the reason I'll take it almost without exception is because it is such a high probability signal. It works out so often. Does that mean it works out every single time? No, it does not, but it works out probably about, well, 80% of the time or better. All right, so here's our Raptor trade. We hit our profit target. We're falling off sharply. I'm going to go with the parabolics now. They're much more aggressive, and you're going to see that the parabolics are going to roll down here bar for bar, and as the trend starts to slow, the parabolics will get in really nice and tight to protect more of my open profit. So the buyers really getting flushed out of their positions now. And how are we doing here? Yeah, we got about another 275, 280 in open profit right now. I'm going to let it ride. See if we can't get back down. Where did I say that median line was? Oh, we blew right through it, 42.73. Took a little bit of a pause. You see there was a little bit of buying here, but otherwise we floated through that one. Next stop, 42.62 quarter, which would be our primary support. All right, and here we are now on primary support, getting a little bit of reaction, 42.62. Buyers trying to buy up the market a little bit. As the sellers keep applying the pressure, notice how the Trailblazer is bringing in the stops really nice and tight now because the market momentum seems to be failing. And come on, give me one more run. One more swing lower. Oh, come on, you guys. How are we doing here? Oh, 400 bucks. Okay, that's all right. That's a nice little move lower. After this, we'd be looking for the low of the morning, which is around 42.56, 3/4. Oh, darn, got stopped out. Gee, that's too bad. Only made $400 profit on that one. Oh, well, it was a nice move. And the best thing is we saw it coming, right? We saw the way the market was setting up. We had our clues on our tools. Let's see here on the hawk. Yeah, see a nice first micro macro cross signal again right there. Boom, down she goes. The trend change signal here on the Falcon developed rather quickly. That's why I punched into the Raptor trade. I was looking for another chance at the Falcon. Should have got it right here. The buyer's not quite able to generate a green bar, in which case the sellers would have come back with a red bar right here and a sell signal. But again, that's why we have different tools to take advantage of these things, right? If you've ever wondered why you can have a good day one day and a terrible day the next, it's because you're trading the same signal every single day. And your signal may be working for one type of market condition, but when the market condition changes, your signal no longer works, and you don't know why. Well, it's because the market environment has changed. It's like my grandpa used to say, if the only tool you have is a hammer, then every problem tends to look like a nail. Well, here you got 4 different tools. Well, essentially 3 different tools. The Raptor's kind of a blend. All right, you guys, that's about it for today. If you are trading this afternoon, hey, it looks like the sellers are in control here. So I'd be looking for more sell signals. We had a nice little trend line touch signal here on the Falcon. Problem with this signal is, where do I cover it? Right? I don't have a whole lot of structure here, so I'm going to have to, can I cover it above the primary? No, that's out of reach. Can I cover it certainly above the median line? Yeah, that one I can do. Got to give it a little bit of wiggle room here because, hey, we made a drastic move lower. The buyers have to show up somewhere here, and I don't know how high the buyers can push it. But regardless, even if they do hit my stop, again, it's not an amount that I cannot afford. Very important concept. All right, if you have any questions, please type away. Otherwise, we will close up the trading room for the day. Okay, no questions? All right, you guys, thank you very much for your attendance today. I hope that you got a little something out of it. And DTS owners, I will see you in the trading room again tomorrow morning. And the markets have been very responsive last couple of days. Hopefully we'll see another good day tomorrow. All right, we'll talk to you tomorrow then. Bye for now.